Well, thanks for tuning into India Market Close right here on NDTV Profit. We'll be getting you some of the live rates in a bit, but be that as it may, let me just tell you what's moving and what is not in the markets today. About 0.4% higher for the benchmark indices, for the Sensex and the Nifty, that is, which is actually a pretty good trading day today. We've kind of trended higher for a better part of the trading day today, which is actually a pretty good sign. So keep that in mind. And just very quickly, I'll tell you what's moved today. It's essentially being led higher by banking and auto. The auto stocks are definitely at a high, and which augurs very well for our markets. Now, let's try and do this show with a slight bit of a difference. Let's first try and get in our expert, Soni Patnaik, AVP at JM Financial Services, to try and get her sense of how is she looking at both the tech and the derivative aspects and what to do in a scenario like this a day before the year ends. Soni, thanks for joining in. I don't know if that is as material as the expiry is today, but how are you seeing the market trades in today's session, and what do they mean for today and let's say the first day of the new series tomorrow?
Good afternoon, Niraj. Thank you so much for having me on the show. I think what is more imperative today is to note how the rollovers take place from December to Jan series. Now, yesterday and today, they've already indicated that both the indices are towards the long side of a rollovers. It means that traders are rolling over a lot of long positions into the Jan series. It'll get confirmed by today's day end. However, as of now, it is more of long rollovers, long positions getting rolled over. So it means that, the upside still remains intact. If we look at Nifty, there's a range that has been discovered recently, which is 21,300 with a very good support. And going forward, of course, 22,000 targets are open, very much on the card. So I think likewise for Bank Nifty also, we can see that as long as 48,000 is holding, then much likely it can test 49,000 also as well. So it may happen more on the Jan series. So both the indices, they have a bullish undertone, and perhaps that kind of an action is going to continue in Jan series as well.
Okay. People are getting a bit skeptical, waiting for the correction to happen. Soni doesn't seem to be coming anytime soon. It doesn't, rather, let me not profess that. I'm just saying people have been waiting for the last 1 month. It has not been coming. Are you of the belief that 22,000 on the Nifty will come faster, come before, let's say, 21,250?
So if we look at for a very short-term perspective, there's a higher weightage of Nifty testing, 21,800, 22,000 band faster than it can see a deeper correction in markets as of now. Even the data on the derivatives front plus the technical front are also indicating there's just one parameter which can be taken on a high, slightly cautious note, which is your India VIX. So today we've seen it has crossed 16. It does not necessarily indicate that there's a correction in the short term, but perhaps more of volatile movements can be seen going forward. So I think that's where, positions can get hedged or, stop losses can get trailed going forward. But most likely, looking at the rollover data, there is a slight chance that even if there's a small dip towards 21,500, it gets bought into, and you can see 22,000 faster than any meaningful correction see.
Okay. And which is good to know from a bull's perspective, but since that is also not as short-term a perspective as the calls that you're likely to give today, Soni, let me first start with the calls. What is it that you're recommending this afternoon?
Likely, Niraj, like you've already mentioned today, being automobile, we've seen a lot of stocks from that space, especially where we've seen a good momentum. So auto sector is also one of the sectors which we are seeing very good rollovers starting, so on the long side. So the first pick would be from that space. It is Exide. I think Exide is believable to be giving a very good breakout on charts as well. So you can buy Exide with stop loss of 295 and targets of 320 to 322. The second pick would be from the metal space. Similar parameters again. I think very good rollovers, good positions getting rolled over to Jan series. And the stock pick would be NMDC from that sector. NMDC has shown very good multi-year breakouts. It's at, multi-week breakout, and you are seeing good positions also getting built on the long side. So with a stop loss of 193 NMDC, you can buy for targets of 225.
Metals are selectively having a good day, Soni, today. I mean, we've seen While the large cap end has maybe a Tata Steel and not too much else, but we've seen Hindustan Copper have a good run. Some of the smaller ones, Jai Balaji was locked on a 5% circuit as well. So I'm not surprised with NMDC, but is there something else? Maybe a Hindustan Copper, what's the call there?
So I think Hind Copper already has shown that very strong upside. In fact, it would be advisable to book some profits and trail your stop losses. It's a one-sided rally. Anywhere you see a dip towards 230 or so, it should be a good level to re-enter and reinitiate your longs again. So wait for that small correction to happen. It's a very good stock structurally, even on charts, positionally quite strong. It's just the dip that can come, some sort of profit booking, re-enter in that dip, and you can again, see from 230 onwards, it can bounce back to those 260, 280 odd levels.
Okay, well, watch out for that. The other one, right, I was talking in the morning, viewers, about what could happen to a Punjab National Bank post the fundraising, if the fundraising announcements are successful and as and when they get done. Because remember, for banks and financial institutions, raising money is currency, and that coming in actually increases their book value, and therefore the price to adjusted book value multiples would necessarily equate to prices moving up as well. And we're seeing Punjab National Bank up over 6% in the session today. Really strong show put up by that one in trade. Much as people, Soni, just one more question. Much as people don't quite like what's happening with PSU banks per se, a lot of times the stocks have shown some reasonable strength. Do you have a favorite amongst the PSU names from a trade perspective, maybe a positional trade perspective?
See, definitely. I think both PSU and private banks put together recently, they have outperformed and led Bank Nifty to these all-time level highs. Amongst PSU banks, there are a lot of structurally, technically good, stocks such as SBI, Bank of Baroda. But the top pick from amongst all these stocks would be SBI. So SBI, it has shown you that, it's been consolidating above its all-time high breakouts, which was seen above 635 odd levels. So that breakdown is very much, breakout is very much intact even till now. So as long as it's holding 630 odd levels, I think SBI is heading towards 680, 700 as a range. So it's a positional play, and you see any dip towards 640 or so, you can definitely add. You keep your stop losses to 630, 625 and pullbacks, and you can see it bouncing back to 670 levels. Once it's sustaining above that, it should be even testing high levels of 700 also.
Okay, well, Soni, stay on. So much more to talk about. First, let's go around to Himansh Kanwal, who's my colleague and who's got the volume buzzers for the day. Himansh, good afternoon.
Good afternoon, Niraj. So, volume buzzers of the day. Let's start off with Suprajit Engineering. Clearly, it's buzzing on 30 times volume compared to its 30-day averages, and the stock has seen gains of as much as 10.6% intraday today. This follows after the company disclosed that HDFC Mutual Fund recently increased their stake from 5 to 7% in the company, and this has really been bringing in a lot of investor interest towards this counter. You have Green Panel Industries, volumes at 13 times their 30-day averages, and has seen noted gains of 13%, and this comes after the company has also been, lately been performing better. It's also one of the largest manufacturers of medium density feeder boards, which is an enhanced version of plywood. So it's really a proxy play on real estate that you're getting to see here as well. You have Sula Vineyards that rose 4%. Trading volume was 10 times its averages, and the iconic thing about this one, it's actually set out its numbers for wine tourism that are at record highs. Of over 5,000 visitors came in on a single day on December 24th, and that has been really investors are coming in ahead of them posting their results because they get a lot of their revenue generation coming in from wine tourism. Hutco sees the best two-day rally with volumes up 5 times, stock noting gains of nearly 20% after the company said on Wednesday that it will be financing 14,500 crores worth of projects in Gujarat. So that's really what's been helping these counters garner the kind of volumes that we are seeing here.
Okay, Imansh, thanks a lot for that. Appreciate those volume buzzers and a clutch of them out there. Okay, we need to slip into a quick break on that note. As we head into the break, a sector that is in focus is aviation, or everything connected to aviation. I spoke to Aquamarine Capital's Guy Spear, who talk about the opportunities in the global aviation sector. Listen into a slice of that conversation.
15% of the world's population has actually flown on a plane, and the vast majority of the world's population has not even flown on a plane. And there is absolutely no doubt that eventually all 8 billion people, or whatever population we get to on the planet before we stabilize, are going to want to travel. Travel is this basic that people want to do. That means that we're going to need far more airports, airplanes. So simply flying, the planes that transport the passengers around, the aero engines that drive those planes around. So anybody who's a financial analyst would get excited about is that these are kind of like, there are many industries, or there are many businesses where you can't rely on endless growth. And sooner or later, it comes to an end. It stops for one reason or another. The market becomes saturated. But this is an industry and a demand that is kind of a source of endless growth, if you like. And endless meaning that for the foreseeable 20, 30, 40 years, we're going to see regular single-digit increases in the number of passengers traveling. And that drives the demand for airframes and the demand for engines and the demand for airport space. And so that's just a really, really fruitful area to look. And
I'm back with India Market Close right here on NDTV Profit. Let's welcome in our guest, Sudip Bandyopadhyay. He joins us right now with his thoughts. Sudip, so good having you. Thanks for taking the time out. Sudip, I was talking to some guests throughout the last few days, and you can almost say that while it was not a banner year for Indian markets, we ending very, very well on almost all counts, be it large cap performance, be it mid cap or be it small cap performance.
Yeah, I completely agree with you, Niraj. I think it's been a great year for Indian capital markets. I think it's a Goldilocks scenario we are in. Pretty much things which all could have worked in favor have worked in favor. And I think the biggest contributing factor has been a strong liquidity, both domestic as well as international, which has been available for Indian capital market. FIIs were not putting money and taking out money, September, October, but from November onwards and December has been a floodgate as far as FII money is concerned. Very clearly, the risk-on mood is back because what's happening in US, the soft landing is a reality, and the US rate cuts will happen. Yields have come down, so obviously FIIs are bringing in money. And, as opposed to China, I think the preference now is India, at least for structural and long-term funds. Short-term tactical guys may still venture into cheaper markets like China and Taiwan, but the long-term guys, I think, definitely are preferring India. As far as domestic scenario is concerned, I think $2 billion plus SIP incremental inflow every month, I think provides a fantastic base when FIIs do sell or do exit. So I think we have a strong liquidity in Indian market, which is ensuring that we don't go down even when there is a change in mood of the FIIs.
Sudip, you are somebody who's seen many more cycles and many more years in markets than most people would have. Is this the interest and the global money and India's positioning and therefore the size that we have currently as well, which is higher than ever before, is this materially different than any of the past instances, Sudip? And would you be consistently invested or continuously invested for the next 2-3 years or 5 years unless something materially changes?
Niraj, I think one fundamental difference I find between the earlier times, whenever we have been bullish, let's take last 20 years, 25 years, there is a significant negativity around China. Now, this was not there in, let's say, in 2000 or 2010 or 2008 or, 2013, 14, 15. This situation vis-a-vis China is the development of last 2-3 years. Certain political realignments, alignments has contributed to this. Also, some policy decisions in China and a very clear slowdown in Chinese markets have made the investors lose money. Pretty much all the FIIs who were invested in China have lost money over the last 2-3 years. And this has made them really, really skeptical about China. And, even today, if you look at what the FIIs have invested in China, it's close to $3.5 trillion. And you compare that with what they have invested in India, it's close to $0.7 billion. Trillion dollars. So, let's say out of that 3.5, even $1 or $1.5 trillion comes out over the next 12, 18 months. And 50% of that moves into India. I think we'll have a flood of liquidity coming through the FII long-term and structural investor route. So I think this is a situation which was never there beforehand. And I believe that this is going to change the way Indian markets function. Now, what is critical for India is to continue the path of reform, maintain fiscal discipline, and we have to hope and pray that the oil prices remain under control. Now, this is one factor which is only we can hope and pray, because it depends on a whole lot of factors which can't be controlled by anybody in India or, for that matter, anywhere in the world.
Okay, well, and stocks are flying. I mean, we've spoken about how some of the large caps have done well, but the stock of the day arguably has to be HUDCO. It's done remarkably well, up about 18%. They sign an MOU, 14,500 crores worth of is the size of the MOU with the Gujarat government for multiple purposes, including, of course, financing housing and urban infra projects. And certainly the stock is seeing some very strong moves here. Sudip, that's been the story of 2023, and then I'll get Soni Patnaik's view there. Though I don't know if she's got a tech, because she looks at derivatives so closely. But Sudip, to you first. The story of 2023, every second month, there's a new, unheard of or a less spoken about PSU name coming to the fore and making its presence felt. And, for the size that HUDCO has, this MOU, assuming that all of it comes into being, would be a very large business momentum providing business line for HUDCO. Any thoughts on this one or this space?
Niraj, you're absolutely right. I think what has happened over the last couple of years is that government has focused on multiple areas and they have tried to rejuvenate multiple sectors. Whether you look at defense, make in India, whether you look at the power sector, whether you look at the entire housing space, and this is housing and real estate and construction space. I think a lot of changes have happened, a lot of streamlining have happened, and decidedly the beneficiaries, at least principal beneficiaries, have been efficient PSU undertakings, which have been in these areas, and they have grabbed the opportunity. So you're absolutely right. I think the momentum has kept on building in multiple areas where PSUs operate, large PSUs operate, and some of the sectors which were hitherto not heard of also are coming into the reckoning now. HUDCO, for HUDCO, I think this is a very large, significant order or a MOU. And this can translate into a very, very, different HUDCO. This can make HUDCO turn into a different HUDCO over the next couple of years. So we'll have to wait and watch. This is just an agreement. Of course, this is great news, but we'll have to wait and watch for the implementation and execution.
Sometime in the show, later on in the show, viewers, we will ask Sudip Bandyopadhyay about businesses which he believes will look materially different over the next 3 years than what they are looking right now. We were speaking about that about HUDCO. We'll try and ask him about HUDCO or other businesses which are doing that. But Soni, I'll come to you. PSUs firmly in favor yet again. I mean, HUDCO is just a case in point. The clutch of others which are doing very well today too. What looks good based on the open interest positions built out there, or maybe the charts, or a combination of both?
So Niraj, we can see that clearly on technicals and derivative parameters, there are two stocks which are outshining. One would be Coal India today, and it has given a very strong breakout both on technical daily charts and weekly charts as well. So I think Coal India is definitely heading towards, on a positional basis, 400 levels you can see, and on the downside it is trying to form a very strong base of 350. So as long as 350 is holding, you can say that 400 is on the cards. So this will be the first pick, and the second we can say is the Gas Authority Limited, GAIL India Limited, is also looking quite good from the technical perspective. It has given a very important breakout above 151, and post that it's just holding on to that level. So I think as long as 151 is holding as a good support, so GAIL, you can see it heading towards 175 and 180 in the coming trading days. So these would be the two top bets.
Okay, well, and as we said, a lot of stocks flying around. Antique, stay on both Sudip and Soni. Let's get in my colleague Mahima, because Antique has maintained a buy on CESC, but significantly up the target price. Mahima Johnson with the rationale that Antique is presenting. Mahima.
Right, Niraj. So as you rightly said, they've maintained their buy rating, but they've significantly increased their target price from 93 to 150 rupees with an upside of almost 62%. Now, this is on the back of 4 reasons that they've given. The first one is that company is setting up a 3 gigawatt renewable energy generation plant which will be servicing in Kolkata and Noida. The second reason that they've given is the Chandrapur 600 megawatt plant has 2 PPAs with the Indian Railways, where they are planning to renegotiate the PPAs at a higher tariff. They say that if CESC chooses to place spot there, an upside risk to EBITDA by 6 billion in by FY26 is estimated. They've also reported that the regulatory assets of the company has swollen up to 56 billion. That is a growth of 30% year on year. CESC also placed recently a bid to acquire 100% Chandigarh Discom at 8.7 billion. And as per their forecast, they expect that their revenue will grow by 5.4% and their EBITDA will grow by 26% by FY26. They've also mentioned two risks to this. The first one is adverse or delay in the regulatory order, and the second one is capital allocation to projects earning lower quality of equity. So this is the summary of what the report says about the company.
Thank you so much, Mahima, and the stock has done well. Sudip, apt that I come to you on this one. Calcutta Electric, long-standing company, long history, valuations nowhere close to what some of the peers it might be at. Is this a good investment candidate, or are there better ones around in this space?
Well, I think CESC definitely merits consideration, Niraj. And I will just probably pick up this point and answer one of your other issues, which sectors will look different, what will look different. I think power is one sector which will dramatically change over the next few years. I'm not saying it will change in the next calendar year, but over the next 2-3 years. Look at every power company in the country. Look at NTPC. The full name of NTPC, National Thermal Power Corporation. That was the original name. Now, beyond thermal, of course, they're the leaders in thermal and they're the leaders. But beyond thermal, it's a green energy company as well. They have a significant capacity getting created and coming up as far as green energy is concerned. Look at Tata Power. It was a pure play, traditional energy company. Now they have a significant green energy, renewable energy component. Look at now what CESC is trying to do. Pretty much every power company is transforming themselves into a green new energy company. Now this transition is happening in a very phased and structured manner, in a calibrated way. So I think pretty much all the power companies do merit consideration from a long-term investor's point of view. I have been, recommending NTPC for a very long time. I started recommending when it was around 100. Of course, it's significantly gone up. But even now, from a long-term investor's point of view, it is a good buy. So is Tata Power and so is CESC. Now, the pecking order, as far as I am concerned, will be NTPC number 1, Tata Power number 2, and then CESC. But, nonetheless, all of them are buy recommendations.
Got it. Well, so power as a pocket is something that Sudip says might look materially different over the course of the next few years than what it is looking right now. An investment case for NTPC and a few others. Let's do one thing. Let's take a quick break. We need to slip into one. On the other side, we get you the top buy today, sell tomorrow ideas. Try and get you the latest views from the derivative markets as well. And of course, talk about some more stocks which are in news this afternoon. Back with India market close right here on NDTV Profit, and the markets are doing well for themselves. So you got to keep that in mind. About no big changes is what I would have to say. 0.4% or thereabouts in for the markets, with most sectoral indices trading in the green as well. Before we move any further, let's hear in a key market voice. Earlier today on Talking Points, Sudip of Macquarie Capital spoke about why FIIs will continue their focus on India, and he also spoke about his top sectoral bets. Listen in.
The consensus, as I was saying, has been to invest in the financials. It's the largest sector, both in terms of market cap and contribution to earnings. But I think in 2024, we could look at less loved sectors. These less loved sectors could be consumer goods, consumer staples, which have been an underperformer for not only last year, but over the last couple of years, they've been underperforming. We could definitely look at some of the public sector banks. We could definitely also look at the tech sector. The tech sector has been a bit of a dog this year with all the uncertainty around the US, but I think at least as far as interest rates are concerned, the uncertainty has receded. So the tech sector could be a good place to start investing. It doesn't mean that you go completely underweight the financials, but within the financials, I think cheaper banks like State Bank of India look good now. Even in the IT sector, whether it's LTI Mindtree or HCL Tech or TCS, which all look good. So I think raise the rates in sectors which have been less loved through the first and the second quarters of the 2024.
And one of the unloved sectors, I must say, is chemicals and specialty chemicals. The last few days, weeks, these stocks haven't done well. But in the month of December, I think we've seen some traction across spec chem and chemical stocks. Deepak Night was a call in the morning. We've also seen Aarti Industries have some positivity or positive announcements in that they've signed a major deal as well. For a multi-year supply deal, if I'm not wrong, and therefore that stock is certainly in focus as well. Both from a trading and investment perspective, first the investment call here. Sudip, it's a sector that's stayed out of fashion now for the last 18 to 24 odd months, spec chem. Can it do more? What did you make of, for example, the announcement that Aarti Industries has come out with?
Niraj, I think, I have been talking about this. I think specialty chemicals and chemicals have been, the underperformers, grossly underperformed the market. And forget the market, even financially, they have done very badly. Quarter on quarter, they have disappointed the market. I think, we need to look at this entire thing now in a slightly different way. And I think this last 12, 18 months have taught us this. There are chemical companies and there are chemical companies. Some of them are into commoditized chemicals, and some of them are into really, specialized or customized chemical products. Now, the guys who are into real specialty or customized products, to my mind, their demand will continue, and they will not face these kind of challenges in future. Now, let's talk about PI Industries. They are into CSM, custom synthesis manufacturing. Now, they also do chemicals, but I think this PI is in a different boat altogether. But some of the other major companies, like let's say UPL, it's an agrochemical company, fifth largest in the world, global operations. Look at Aarti Industries you talked about. It's a fantastic company. They've been doing well. Leave aside the last 12, 18 months. Let's talk about SRF. I think they are into more into commodity chemicals. And because of what happened over the last 12, 18 months, they suffered. Now, what happened exactly is that global demand was not there because the world was expecting recession, was in a recession. So the global demand shrank. The second thing, the dumping from China started happening. The Chinese manufacturers started dumping the product in the global markets, and there was not enough restocking happening. Now, this led to shrinkage of demand, and the performance of Indian specialty chemical companies was significantly bad. Now, the two things have now happened. One is the fear of recession in US and many other markets is behind us. They are again looking at restocking. And the Chinese manufacturers are also, not in that kind of overstocked position. So they are also not in a position to really supply or dump materials abroad. So this is improving Indian chemical companies' prospects. Of course, the original thesis of China plus one is very much valid, and a global manufacturer today will like to deal with an Indian company rather than a Chinese company. I mean, that's the reality of the scenario. So when they have demand, the demand naturally will expected to come to India. Now, under the circumstances, I believe that from an aggressive investor's point of view, picking up some of these, so to say, commodity chemical companies, not a bad idea. So whether it's an UPL or an RT or a SRF can be picked up, but you need to have a little bit of, you need to have a little bit of heart of steel, because a couple of more quarters, they may not do anything great. But after that, I think that performance will significantly improve, and they will reward probably the investor more than proportionately.
Do you like here, Sudip, if you will?
Sorry?
I mean, is there something that you specifically like? Because I heard you speak about, give some examples of a UPL or a PI and why the models are different. But is there something that you specifically like?
I do like, at this stage, being a little aggressive, I do like UPL. I think UPL can be bought, definitely.
Okay, and viewers, we just explained some of the rationale there. But keep in mind, UPL could be an interesting one. The fundraise also. As a piece of news. So let's wait and watch what happens there. While the markets have ticked higher, but Spec Chem right now is certainly going off. Now, before I go to my colleague Mahima, Soni, we heard a lot of experts the last 48 hours give trading calls on some of these chemical stroke pharma names. So for everything from a Divi's to a Laurus to a Deepak to a RT, etc., all of them have been, I mean, people were sounding constructive. After the first blast of the run-up that we've seen, the stocks seem to be cooling off. Today, Laurus is down, Divi's is down, Deepak Nitrite is down, RT is down. Are these cooling off, or could there be a correction here?
I think, Niraj, it's just a small phase, just a short phase where some of the profit bookings is taking place, especially in RT Industries, considering how vastly they've moved in the past 2 weeks or so. The structure from a technical perspective is still quite strong for these stocks, especially in RT, if we can see. And, if you see any sort of a dip, it can definitely be an opportunity to reinitiate your longs again. Strictly speaking about RT, if I can just look at the charts right now, I see if it getting any opportunity around 615, 610, that becomes a good an opportunity to reinitiate your longs again, because 600 is a very strong base. So the closer that you are to this base, you reinitiate your longs, you maintain that as a stop loss, and then you can see it bouncing back again to 640 plus levels.
Okay, watch out for those names in RT in particular. But it has been a landmark year. We're trading at record highs right now, and while we are trading at record highs, it's also good to look at 2023 and just look at the multi-baggers, because then we'll ask our experts what to do with some of those. Mahima joins us to tell us which were the major movers and why so. Mahima.
Right, Niraj, as you rightly mentioned, it has been a landmark year for the markets this year, and we've seen a long list of multi-baggers as such. If we talk about Nifty 500, we had around 48 stocks that were multi-baggers. Nifty mid-cap had 12 multi-baggers, and the small cap had 32 multi-baggers. If we talk about sector-wise, we saw that capital goods have clearly outperformed in the sector. We had a lot of multi-baggers from the capital goods segment, then we had multi-baggers from financial services, and railways, of course, has had a lot of multi-baggers. Talking about the large cap segment, we had 2 stocks that have clearly outperformed. The first one is Zomato. Zomato had a very bad year in 2022. Where the stock fell by 59%. However, this year the stock has really picked up, and this is because this 2023 has been a remarkable year for new age startups. Zomato also recorded its first profit in Q1 FY24, and it also continued the profit rally in Q2 as well. The next stock in the large cap segment is the Hindustan Aeronautics Limited, which is clearly a high flyer. The stock has been up 2.4 times. Now this is on the back of strong order books and excellent execution by the company. Coming to the mid-cap segment, we have two power stocks which have clearly outperformed PFC and RSC that have grown over 3.5 times. Now, this is mainly on the back of that power companies have been in focus, and these two companies have had robust loan growth, and the loan book size has been fairly large for these companies. So, clearly these two factors are driving the stock price as a whole. In the small cap segment, BSC Limited has clearly outperformed, and we've seen that their EPS has seen an excellent growth, and the earnings momentum. However, we are still yet to see that how the BSE stock will be, whether it will be carrying on the earning momentum in the coming year or not. Next, on the small cap segment, we have Apart Industries, or let's take up Suzlon first. We have Suzlon, where it was added to the MSCI index, and we also saw a very healthy order book in case of Suzlon, and also Suzlon has been gaining these orders on the back of government pushing renewable energy as a whole. Next, we also have Apart Industries, where the Apart Industries has had a very strong year in terms of financials, and the profit has nearly doubled in Q2 FY24. And this is on the back of infrastructure growth and overall premiumization in the cable segment as well. After this, if we have to see the exciting pack of railway stocks, which have literally been multi-baggers of the year, if we see all the stocks in the railway segment have grown over 3%, 2%, if you see, and this was because the Indian Railways is really trying to revamp the trains, and the railway minister recently announced that they'll be spending 1 lakh crore to buy new trains as a whole. We also had a few names in the multi-baggers which really outperformed, that is Keynes Technology, Jai Balaji, which grew over 13%, and we also had Jindal Saw, Kalyan Jewellers, etc. So overall, if we see, the year has been really good, and we've seen a long list of multi-baggers.
Most certainly. Thanks a lot for that. Mahima, I'll pick up one theme from those, and which Sudip Bandyopadhyay alluded to, which is that power seems to be a pocket which might see a bit of a change. Now, Suzlon is something that Mahima highlighted. And Sudip, I want to come to you on Suzlon, on Inox Wind. When you hear these management talk on con calls or on interviews, they seem to be suggesting that this is just the start of what could be an even more promising next few years. Have you looked at this theme at all? It's not too many players currently, just about a couple, but that might change as well. Do you like what's happening in the wind energy space?
Absolutely, Niraj. I think this is what I was alluding to. I think this entire power sector, now we talked about at that segment, we only talked about the power manufacturing. So we talked about NTPC, Tata Power and CESC. But the entire ecosystem will now move towards the renewable energy. Now that will include wind, solar and hydrogen. Now the whole issue is which of this will be winner, which of this will be more dominant 3 years down the line. It's very difficult to predict today, but all three will exist and all three will have their runway. The question is whether it's the solar battery or solar power manufacturers, solar equipment manufacturers, or the wind energy, like wind related product manufacturers like a Suzlon or an Inox Wind. We have to see. But my belief is that all of them will have a long runway and fantastic growth over the next 3-4 years. We should not forget the hydrogen bit also. That's also something which is being worked on rapidly by Reliance Industries, Tata Power and few others. And that also needs to be kept in mind while we are doing this analysis. As far as specifically power sector is concerned, I think one more area I would like all of us to note is that the power financing companies. Now, if we are talking about a huge capacity addition in green energy as well as traditional energy, the financials also come into play. We have seen PFC, REC and the likes IREDA, which got listed recently, show fantastic performance in the market. And there's a valid reason for that. These projects cannot be financed by the traditional, PSU banks or the private sector banks, commercial banks. They may cut a small check, but the larger checks will have to come from these power financing entities. And that's the reason why we see excitement around these companies as well.
Yeah, certainly seeing some excitement out there. Soni, would it be, I mean, I don't know if you, these are not very liquid in the derivative side, they're not present, but by any chance have you looked at these names?
Niraj, actually not quite had an opportunity to look at the names. Perhaps if you can just allow me, I'll take a look and I'll get back to you on them.
No issues. But like I said, I kind of realize that it will be difficult to do it that way. But nevertheless, this is a set of names that have done remarkably well for themselves. Today, what is also doing well is other oil marketing companies. There has been a big surge there in HPCL, but BP and IOC are not far behind either. So watch out for those set of stocks. With the indices trading at fresh highs, there is merit to talk about them. Soni, how about HP in particular, but even BP and IOC?
Definitely, I think a lot of positive positions have been seen in the entire pack, especially HPCL, which was facing a hurdle of 400 in the series. It has crossed that particular level and it is closing above that resistance. So I believe that 400 becomes your recent immediate new support base. And with this, it can definitely try to test higher levels of 460, 465 levels also in the coming trading days. So I think HPCL also is looking quite good. Similar levels for BPCL as well. I think BPCL also has not moved much in comparison to HPCL. But then when we look at the technical charts for BPCL, there is still a lot of space for it to test 480 plus levels. So I think BPCL also is a good addition. And very small, I think you can just look at your good support of 450. So I think keeping a small stop loss of 450, you can see the targets of 485 plus.
Mm-hmm. Well, HPCL is up 9.5%, so good going there for this name. What else? I think there's strength in BHEL. It's now at 192. Buzz of an order win, but that stock has certainly surged in trade. So watch out for that one. There is strength in IEX at 4.5%, 161. So that's doing really well. GMR Infra, the airport story, is up about 4%. And we just heard Guy Spear earlier on in the show as well talk about how aviation, not by airplane companies, but the others, could really be a shot in the arm. Sudip, coming on this very early in the per capita life cycle of India, the aviation sector seems to be getting consolidated. On the airline side, it's Indigo and to an extent Air India, but the airport side as well, Adani Airports and which is, well, it's not pure play listed. So in terms of even listed names, there is just one GMR Airports. Do you like this business? Would you go out and invest into these?
I was listening to the interview which you took some time back, and excerpts were playing. And, it's so correct. 15% of the population has flown an aircraft. And obviously, there are aspirations for the balance 85% also to flow. So obviously, we need not many more, airlines, airports, and related infrastructure. And that has to come up over the next few years. I'm not sure whether 100% will fly, but at least 50% probably will fly. And that's a huge, incremental delta from here on. Now, the question is, historically, airline industry has been an extremely volatile industry, and honestly, I don't like it much. There are ups and downs. If you are a savvy investor, you can get in and get out. But there is hardly any airline in the world, apart from maybe Singapore Airlines, which have consistent track record of profit and profitability and continuation. So it's a difficult industry to predict and to work with. So if I have to play this entire story of aviation boom, I would rather go through airports, airport operators and other ancillary companies which may or may not be available in the listed space as of now. But yes, GMR Airports is one which one can look at. Someday there will be more listed companies, and we should look at that. That's a much, much safer bet. And I believe that, I'm not sure about the exact figures, but even today, 60%, between 50 and 60% of the airport operators' revenue come from non-aviation services, which is retail and other things. So that's a very good model to work on.
Most certainly. I mean, I'm not aware of those numbers either, but if those numbers are true, it could be very, very interesting, because I think those numbers will only go up as more and more transit passengers come into the airports, and as airports modernize and you have to reach there quicker, or rather earlier, then your spend per passenger on the airports will also move up. So Sudip Bandyopadhyay, thank you so much for giving us those thoughts. Now, before we let you go, Sudip, I'll just take the closing strategy from Soni and then take in a final thought from you. Soni, it's 3:20, about 9 minutes left for the trades to shut. What is your top STBT or BTST call?
So it would be a BTST call, and again from the auto space, it will be Tata Motors ending at 52 weeks high. A brilliant closing to this series as well as its year. So Tata Motors is definitely heading towards 780 plus levels, and that can even enter at current levels. Keep a small stop loss of 740 for targets of 780.
Okay, so that's a BTST on Tata Motors. Sudip, just one word on the recent listings and any that might have stood out positively for you, because the subscription numbers and the premiums at which some of these companies are listing is quite astounding.
Tata Technologies definitely was a great addition to the listed space. Inox was a great addition to the listed space. These are specialized companies working in particular niches which are on their upswing. So I think these are good companies. Some of the jewelry companies which got listed, I'm not talking about the valuation or the number of times it got subscribed, but as a whole, the jewelry industry, a lot of good companies are coming and getting listed. That is an interesting development. We only had Titan to play with. Now we have Kalyan. Now we have 3-4 other jewelry companies to kind of play with as far as the listed space is concerned. And one general comment, Niraj, I would like to mention here is that we are going to get a lot of money in the market, Indian market, and that is pretty much certain, domestic as well as international. Now, if we don't have more and more companies which are listed, I think the depth of the market will not be there to absorb that money, and the valuations of the existing listed shares will reach unrealistic levels. So it's in our interest, for the health of the market, that more and more good quality companies do come and get listed. I think that will ensure, long-term health of Indian capital markets.
Well said. Well, Sudip Bandyopadhyay, I'm sure people are listening into this as well. But thank you so much for taking in the time and giving us your thoughts. Really appreciate your time. And we were talking about jewelry companies. Sudip was talking about jewelry companies just before we thanked Soni. The interesting piece is what I just saw. What's escaped the eye and has had a fabulous move is Titan. Sometime during February or January or February of this year, the stock price was at maybe 2,300. It is currently at 3,700. That's a remarkable 50-60% up move for a large stock with a market cap of over 3 lakh crores. And that is Titan and the kind of gains that this space has had. I mean, we talk about an odd name called Sky Gold having had a good move, or some of the others, but you did not have been very clever. Just bet in on the largest name and you've gotten more than 50% returns safe and sound in Titan. And from whatever they're saying, they're not done as yet. So good going really for this one as well. It's all the jewelry companies and the RBZs and some of the others getting subscribed heavily. Titan is right up there, but I must say markets are right up there, about 0.55% higher, 396 and counting. So really strong show by this the Sensex. 0.55% is essentially the point I'm trying to make, but extremely buoyant move in the session today for a clutch of names, and OMCs are right up there, but some of the others are not far behind as well, and the price movements on a lot of stocks are very good. Sula, by the way, said that a clutch of new tourists have come in, and the wine tourism is high, so that too was very, very interesting. Other management that we had to chat with today is Gensol Engineering. Anmol Singh Jaggi, MD of the company, spoke about the company's revenue guidance going forward. Listen in.
In FY26, when we take the plant to full production capacity, that is the time when we can see that we will have a revenue of about between 1,600 and 1,800 crore rupees on the EV manufacturing. And that time we can easily expect a 15% EBITDA to flow down from the EV manufacturing, which would mean that on a revenue of about 1,600 crores, we could see about close to 250 odd crores of EBITDA coming in from the EV manufacturing business in FY26.
And that's the interesting part. Some of the companies, yesterday Zentex spoke about some multiple times revenue. Today, Gensol talked about revenues growing multiple times over the next 2 or 3 years. I think it's just quite stunning, really, what's happening into some of those pockets. Now, before we let Soni go, just one final comment from her. And last 2 or 3 sessions, Soni, autos have had a very good run. Now, you mentioned about Tata Motors being your top idea. Anything else aside from Tata Motors, be it in auto ancillaries or be it in the two-wheeler names, which also have had a reasonably good run?
I think I've already shared about Excite Tata Motors. The third pick definitely would be Hero Motors for 2 sole reasons. Technically, also, we can see very good volumes. Plus, there's a price action volume breakout. Combined with this, Hero Motors is the highest, it has seen the highest rollovers in the entire auto space. And that is also on the long side. So I think Hero Motors, it has formed a very strong support base of 4,000. And positionally speaking, if 4,000 is held on and defended well, even on any dip, you can start accumulating until 4,000 is seen. And then you can see it again bouncing back up to 4,300 plus levels. So I think it's a very good pick, and technically and derivative speaking, both the parameters are quite bullish on this particular stock as well. It has all the space and momentum it requires to head towards 4,300 plus levels for Jan series.
Mm-hmm. Okay. And Soni, it's a day of PSUs. While we've spoken about a clutch of them, one that I really wanted your opinion on is BHEL. That stock has had a good move. It used to consolidate, I believe, at that 180 level. Suddenly started up. There's a buzz of a large order win there. But what are the charts or the derivative positions telling you?
So speaking about BHEL, there would be 2 scenarios to look at it. One, if somebody is already holding on to this stock from a lower level, it would be advisable and wise to just trail your stop losses to 190 odd levels. 187, 190 would be the right phase where you can actually trail your stop losses. It can head towards 198, 199 levels in the coming days, but 200 will remain a very crucial resistance. So it's once you see those levels around 200, you just book out all your profits, and then you can see some dip coming in again. So I think it will just give you the opportunity to re-enter and reinitiate your longs on a dip only once it has tested those 200 odd levels plus minus 1-2 points you can take. So I think that's where the entire derivatives option metrics is indicating that BHEL can go, and from where the profit booking can actually be seen from this stock.
Okay, and before we wrap up the show and let you go, Soni, the Nifty is ending the day at the day's highs, 0.65%, record highs for the index. Just wondering at 2179 or whatever it is, let's say 21,800 odd levels that we might be circa. Is there a case for a trade on the Nifty itself?
So Nifty, in any case, it would be advisable to buy on dips. If we see around 21,600, you can buy again, speaking on how the spot cash levels only. So if you see around 21,600, 21,500, that would be the entry level zone, keeping a stop loss of 21,300. And then again, you can see Nifty bouncing back to 22,000 levels. So I think a dip is much desirable, and just wait out for the dips. And certainly then you can see the targets for 22,000.
We'll let you go on that note, Soni. Thank you so much for being with us today and giving us your thoughts. Really, really appreciate your time. So that is, the view on the technicals and the derivatives, and we end the show, viewers, and the markets today with the markets trading at fresh record highs. We're making it a habit, isn't it? But more importantly, on the expiry day, while volatility was anticipated, we've had anything but a volatile session. Very strong show. Broader markets as well doing extremely well for themselves, so can't complain at all. Well, with that, it's a wrap on this leg of India market close. But stay tuned because we'll be getting some interesting conversations on the other side of this break.
welcome to NDTV Profit. I am Vikas Shrivastava, and today we have with us Mr. Amit Uplenchwar. He is the Director, Kalpataru Projects International Limited. Today he will be talking to us about the company's growth plans, business outlook, both international as well as domestic. Welcome to NDTV Profit, Mr. Uplenchwar.
Thank you so much, Vikas ji, and to all your viewers, a very happy upcoming Christmas and the New Year season. And thank you for having me on your show.
Yeah. We know a lot about your business in terms of EPC and other contract projects that you'll be doing in India as well as abroad. Can you, for our audiences, tell us how your EPC business is doing or the business outlook is in terms of this vibrant economy that India has seen, and also globally, despite recession talks and other things, we have seen that your order book position has improved. So what's the current scenario right now for Kalpataru?
So I think it's an interesting time, especially for India. And as everybody keeps saying in every interview, everybody is long India. If you look at our economic survey and the results that came for GDP growth, etc., we have surprised even every forecast out there by having, in excess of 7.5% GDP growth, which was completely unprecedented. Yeah. And if you see the breakup of that 7.5%, a lot of that came from manufacturing. Now, it is very heartening to know that India is finally, after several policies like Atmanirbhar Bharat and Make in India, which took time, but now the effect of all that, once the factories are all ready and the production has started, you can see that a huge contribution from manufacturing has started happening in India. And that's good for us, because as this expands, you build more factories, you build more housing, and that multiplier effect on economy has something to do for every sector that we operate in, right? And so from that perspective, this India's stellar growth, and it seems that for the next several quarters, this growth will continue. And so from a macroeconomic perspective, I think the outlook is very bright for our country. And we being a very large EPC contractor in India, in the top 3 in the listed space, I think definitely that augurs very well for Kalpataru projects as well.
Right. Recently, you all had this merger of JMC and your transmission business. So how has it panned out for the company? How's the growth been for the company, after that?
So our rationale for merging the two companies was very clear. They were in 3 different segments each, and then there were some sub-segments, but key 3 segments each. And whilst they both had grown to scale, JMC was constrained by its balance sheet, and Kalpataru had a huge presence outside India in more than 70 countries. And I think the synergy of these two companies coming together, which was seamless, whether from a governance standpoint or from people standpoint, has been absolutely on point as we planned it to be. As a result of this, we've had some immediate benefits accruing as a result of this merger. And those are the obvious ones. So our interest cost in JMC, which was 200 basis points higher or thereabouts, has come immediately as a saving to the combined balance sheet. We were constrained to go internationally with the JMC divisions in order to secure very large projects or complex projects because of the constraints with the balance sheet. But now, since this merger was effected, we've had our civil divisions, our water divisions, they have gone overseas as well. So we've got a very large EPC airport in Maldives that we are doing, where we are doing both, the air as well as non-aero revenue. We are doing a jetty, which is a part of that development. We are doing data centers. We are entering new segments in our urban infra division, which is the underground tunneling, metro, etc., which are highly complex projects, require large capex. And this all has been possible because of the merger of the two companies, making it one of the strongest balance sheets in the country today in our segment.
You spoke about some of your verticals. Can you talk about or throw some more light on some of your core verticals? And I also got to know that now you're planning to enter into manufacturing. I know you're setting up some new lines there, and you also spoke about your metro. So if you can give some more details on that.
So, our core segments have always been in transmission, both for lines as well as substation. We've been, growing steadily and in the water segment. We've got our railways, we've got oil and gas, and we've got urban infra and the building and factories division. So these being the 6 core divisions, and then we have manufacturing which supports all of these divisions from viewpoint of either fabrication or towers or steel, girder fabrication, etc. Our water business now we are there in all segments. So we are there in irrigation, we are there in networks, we are looking at STPs, we are looking at desalination plants. So we've grown into a sizable water business with order book in excess of 12,000-14,000 crores. And that has good visibility in terms of revenue and being a growth driver for us. Building and factories, again, there has been an explosion in terms of the kind of building projects that are coming. All the buildings are new data centers. It's a new segment that didn't exist 3 years ago. We are already building a very large data center for a sovereign wealth fund out of Singapore, and several other such projects are in the pipeline. We are building material handling plants because there was a lull for several years in terms of large steel plants or material handling steel that didn't happen, and now all that capex has started also happening, as a result of which we are one of very few players in India which do large material handling plants. So our building and factories division is also thriving. The order book is at an all-time high. We are practically present in most states of the country. Urban infra, we are doing the elevated metro for Kanpur. We are hopefully favorably placed for some underground metro using a tunnel boring machine in one of the large metro corporations, and hopefully we convert that sooner than later. We are looking at bridges, we are looking at marine structures. So all of those segments in urban infra is something that we are very aggressively working with. We've got our railway segment which is expanding. Our transmission in India has gone through, after a 2-3 year quiet period, now the projects are coming because large renewable energy plants in line with our vision with COP28. So we are building very large renewable facilities which are far away from cities, and in order to connect them with the main grid, large transmission line projects are happening in Gujarat, in Rajasthan, in Karnataka, all across the country. And we, being one of the largest manufacturer of towers and also having the most experience in building EPC for both transmission as well as substation, we see a very large opportunity set and outlook over the next 3-4 years looking very solid for our transmission business, both in India as well as internationally. Our oil and gas, we've been working for the last 6-7 years trying to qualify ourselves in major international as well as national oil companies outside of India, and that is bearing fruit. We are now in 7-8 very large geographies in the Middle East and Africa where we are already qualified as an EPC contractor for oil and gas in quite a few segments. And we've been bidding steadily for Saudi Aramco, for ADNOC and some other international oil companies, and hopefully we should be able to get some orders there as well in the quarters to come.
Which are the segments in oil and gas where you are bidding for?
So, oil and gas is upstream, midstream and downstream. So upstream being oil or gas being taken out of the ground. So that is an area that we are increasingly building our capability, both from an engineering standpoint, people standpoint, and we are bidding for those projects in Middle East. Pipelines is something that we've been very strong traditionally. We're one of the largest pipeline contractors in India with one of the largest fleet for both HDD as well as pipe layers in the country. So that is something we'll continue to focus on. We are also looking at downstream units for fertilizers, for other parts of refineries in the downstream segment, be it for MRPL or IOCL, etc. And we continue to bid for those. So we are present across all three: upstream, midstream, downstream of the oil and gas segment. We are also looking at newer forms of energy. So today the energy basket has expanded from just being oil and gas to also hydrogen, some of the other areas. And clients being the same. So today if Indian Oil is doing a hydrogen plant or a refinery, we can also look at those areas, and we are keeping a keen eye on how those projects are developing, and hopefully be a part of that in the quarters and years to come.
You also spoke about entering into manufacturing lines, and you all are setting up some new manufacturing lines. Can you throw some light on that?
So we've, as you're aware, we have in Raipur and Gandhinagar very large capacities in terms of building towers for our EPC business. And as our building and factories division is becoming very large with revenues in excess of 4,000 crores per year and growing steadily at 15-20% year on year, we are also now looking at manufacturing scaffolding, which we used to take from outside now to do in-house. So we set up a state-of-the-art scaffolding manufacturing line at our Raipur factory, and hopefully now we will start servicing all of those requirements in-house. We are also setting up, in fact it should get inaugurated by December, a very large steel girder fabrication manufacturing line where we will look at all the segments of, be it high-speed rail, railways or other bridges, etc., where very high capacity and voluminous steel girders need to be fabricated. So that's a new line that should open by Q4 of this year as well. And so this is some of the expansions that we've been doing over the last year or two in our manufacturing area of, our vertical in manufacturing.
You spoke about several new manufacturing lines that you are setting up and new businesses that you plan to enter. This will require a lot of investments. On the other hand, you are also an EPC player where you are getting a lot of orders internationally as well as domestic. So what is the total order book position as of now? And in terms of investments, how much you are planning to invest, say in FY24, now only 1 quarter is left, and also in FY25, what your plans are?
So we are still firming up plans for FY25, but I can tell you about FY24. Our manufacturing in terms of capex, luckily for us, when we've planned our existing tower facility, for instance in Raipur, is in excess of 130-140 acres. And when we had built this plant, all our power requirements, our effluent, etc., we had planned for a much larger facility. And right now we are using a part of that only. So for us to put these manufacturing lines, because we already have all the civil work done, we have our factory done, we are just adding these manufacturing lines. So for someone who sets up just a new product line from scratch versus us, for us the cost is minimal compared to that, because most of our management and everything is already in place. So this is a huge augmentation for our EPC projects and give us that capability from an end-to-end perspective. So far as our order booking is concerned, our intention is to balance our business both in India and overseas. As the name suggests, our merged entity is called Kalpataru Projects International Limited. Our order book currently, the way the split stands, is roughly 60% is coming from domestic markets and 40% is coming from international markets. Increasingly, we want to take our other verticals and segments overseas, as I mentioned to you a little while ago, and hopefully we should balance this to 50-50 in the next 12 to 24 months, and that's what our endeavor is. So far as our capex is concerned, we had guided for around 275 crores of capex in FY24, and I think we should be achieving that capex given the fact that we should be growing at around 25%. We had said 25%, but close to 20-25% is where we'll be at the end of the year, hopefully, growth compared to last year, and this capex will be required to meet that growth.
Okay. And as far as your ratio you said is 60-40, but what's the total order book right now that you have?
So currently, as of 30th September, we were in excess of 50,000 crores, and including L1, we had guided at the beginning of the year that we'll do close to 25-26,000 crores of new order inflow, and I think the way it appears as of December, we should be able to meet our target at the end of the year.
Okay. I'm not sure how much you'll be able to talk about numbers in Q3 terms, but if you can talk about your turnover and growth trajectory that you are looking at for FY24.
So unfortunately for Q3 it will be inappropriate for me to say because we still have to close the quarter and the numbers are still not out there. But so far as FY24 is concerned, we had said that we should grow in the range of 25%, and our endeavor is to grow in that range so far as our revenue is concerned. We had also mentioned that our PBT should be a healthy 4.5% of revenue, and we are still working very hard to ensure that we meet that target at the end of the year. Order book I already mentioned to you. So I think overall we are quite pleased with the way the execution is shaping up. Order book is robust, which gives us good revenue visibility over the next 24 months. And so that puts us in a comfortable position to look for new business at better margins because we don't have the need to fill in orders. So we are being selective with what orders we take and which segments we take in order to have a very balanced portfolio of businesses, which will be holding us well in the next 2 to 3 years.
Okay. One last question. Overall, how do you see your industry to perform? Not just in FY24, but even for next year, if you can talk about.
So I think there has been gradually shift in our industry in terms of execution capability. So whilst construction is always a laggard, when it comes to adoption of technology, but I think some of the larger firms like ours have been investing continuously over the last 3-4 years in technology, as a result of which we are seeing a lot more mechanization happening on our projects. Our monitoring and dashboards, etc., are becoming live and in real time. As a result of which our monitoring is far more robust. Our control and execution is far greater than it was a couple of years ago. And I think that should hold well for companies like us in the next years to come from a execution standpoint, which is the key for us in our business to make money. If you finish your projects on time and you're doing it at the right quality with less resources, you're going to be profitable and more sustainable in the years to come.
Thank you very much for talking to NDTV Profit. It was our pleasure.
Pleasure to be here. Thank you so much.
That was Mr. Amit Uplenchwar, Director KPIL, talking about his business growth plans and outlook. Thank you for tuning into NDTV Profit. I am Vikas Srivastav. Today we have with us Vishal Kapoor, the CEO of Energy Efficiency Services Limited, a central government entity that's working or helping India achieve its net zero targets through its sustainable energy products. Today Mr. Kapoor will be talking to us about their existing products and projects as well as their futuristic plans. Welcome to NDTV Profit, Mr. Kapoor.
Thank you, Vikas. Thank you for having me on your show.
Yeah, my pleasure. Just wanted to start with asking a question on, like, when we talk about carbon emissions or when we talk about sustainability goals, we have seen that there are these hard to abate sectors like, steel, cement and long haul transport vehicles, shipping sector, etc., which have been the major contributors to pollution emissions. In comparison, when we talk about EESL products and projects, can you help our audience understand in terms of reducing emissions compared to other projects that government is running, how much these products and projects will contribute in terms of reducing the emissions? And also if we can talk about the potential that exists for these products and projects of EESL.
Because if you see the best bang for the buck in emissions reduction lies in two specific areas. One is the industrial sector and the other one is the domestic retail sector. Out of all the sectors, you also mentioned transportation and I'll come to that. So retail space, I was reading a report recently wherein it said that almost around 45% of the energy consumption actually goes into appliances sector across the world. And India is upwardly mobile, appliance uptake is on the high, and definitely, I mean, if the world is consuming almost 40 to 45% on appliances only, as opposed to the whole transportation sector that is consuming 21% of the energy. I think a lot of potential lies in the retail sector, and that's why we are increasing our footprint in the retail sector using various strategies, like coming with energy efficiency marketplace, which will be a one-stop shop only for energy efficient appliances. In any case, we are doing that for institutional customers in bulk deals as well. But as a company, beyond this retail segment where a lot of latent potential exists, we are also working in a big way to electrify the public transport. You might be aware that electric buses, our subsidiary in the ESL group called CESL, is actually aggregating demand. We have already done almost 12,000 buses, and we are also currently underway with the PM Bus Seva electric bus bids. So in overall situation, in so far as the transportation sector as well as in the retail sector, we are going big on both these sectors. Apart from that, industry I mentioned is another big latent potential area. We believe that in big companies and big industries, basically energy efficiency is also cost efficiencies, and therefore a lot of work is already being done by them under the PAT scheme and other such measures. But the real latent potential lies in the MSME sector, and we are tying up with SIDBI under the tutelage of the Ministry of Small and Medium Enterprises, and we are coming out with a revolving fund to fund basic energy efficient projects in almost around 36 technologies. So this is about our immediate priorities.
What is the kind of potential exist for these products that you spoke about? And also briefly, we can talk about this fund that you are talking.
Yeah, so I mentioned to you the potential. I talked about 40 to 45% of the energy across the world is being consumed by appliances. And this is not all the appliances. These are only 20 major appliances. That includes air conditioning. It also includes industrial motors. So if you do the breakdown of this, 15% out of this whole thing is for the retail appliances. Almost a similar amount lies for the appliances that are used in the industrial sector, predominantly motors. So motors consume 15% of the energy across the world. And if you compare it with the entire transportation sector, it's 21%. So you can imagine how much these basic appliances are taking. So and 10% goes into the commercial segment space. So basically the real energy efficiency lies in this particular thing. Insofar as India is concerned, we believe, and there are some estimates that suggest that an investment of almost around 8 lakh crores is required for the next 7-8 years if we want to attack the basic energy efficiency domain in the field of this energy conservation. Beyond that, you mentioned about this fund. This fund we are setting up along with the SIDBI. It's a revolving fund, and this fund basically will be used to provide loans to MSMEs against specialized 36 technologies, and the money will keep on coming back into this fund so that it becomes a revolving fund and a self-sustainable fund.